Hey, hey, hey. Morning, everybody. Comment allez-vous? You guys ready to go? Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders stationed around the world. We gather here today for this thing we call technical and fundamental analysis, otherwise known as trade planning. I'm here to answer your questions. I'm here to keep you prepared. I'm here to keep you focused. I'm here to keep you sane. And if you're into that, if that sounds good to you, please click the thumbs up button. Tell YouTube this is quality content. 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com and the guide on this thing we call Forex. Please ask questions, get involved, keep things professional. That's pretty much it, right? Ask questions, get involved, take notes. That's it. That's cool. So we're going to look at the markets today. We have non-farm payrolls way out on Friday. Today's a Tuesday, the 29th of June. So we're getting closer and closer to entering what we call summertime conditions. So we have to be prepared for a change in market conditions. In particular, the loss of volume and volatility, and you may have already noticed that happening. Right now, it seems like there's money coming out of the market, and I'm here to help you through that process. So thank you for being here. Thank you for doing what you do. Thank you for the positive energy and your interest and intrigue in Forex and things like macroeconomics. You give me the strength to get out of bed. That's good, right? I'd like to thank Traders Way for being part of our community as well. You're a trader, they're a broker. Hey, it's a symbiotic relationship. They need you, you need them. But ultimately, it's based on, for you, based on trust. That's ultimately what it comes down to. So let them earn your loyalty and respect and your trust. Give them a shot. They've earned my loyalty and respect. TradersWay.com, open up a demo. Get on with it, build a relationship. Okay. So where are we? Money coming out of yen. Money coming out of dollar. Swissy just, right? Crazy, right? So money is coming out of Australia, right? Sydney and Perth and a few other cities are shut. Money is coming out of the UK. Money is coming out of Euro. Money is come out and maybe regaining a little bit of strength out of Kitty Cad. Money is coming out of New Zealand. Now, that's not everything, but money is coming out of South Africa, for example. And we'll probably take a look at that. So what does this tell you? Money is coming out of the market. I don't think this is risk off. I don't think it's the end of the world. I don't think it's because of things like interest rates and taper tantrums. And I think this is money just leaving. And you need to keep that in mind. Okay? What do you think of that? That's pretty interesting, huh? Cool. All right. So trade this for now. and then in my opinion, be open-minded to go from bearish to neutral. Okay? Okay? Maybe not today, maybe not tomorrow, but I think next week is going to be very quiet. Be prepared for that. Let's go do a trip around the world, take a look at commodities. Oh my, WTI. Didn't we just do this yesterday? And I said, hey man, if we're down here, right, I got serious concerns and heartache. And check it out, we held. Nice! How nice is that? Thank you, WTI. Thank you, price action. Okay? The other thing is I've taught you how to trade gold and oil, and you know that this is the most important candle. And that you should be entering the market right about here on that doji. And you're looking at it going, I wonder what I want to do today. Okay? So at least the timing is pretty cool. Do you guys remember those videos from, I don't know, I can't tell you how long ago that was. Maybe a year ago? Do you guys remember? Taught you how to trade gold and oil, and I gave you the exact time to show up. The interesting thing is this is actually the time where you start exiting those trades if you're doing a day trade market open type thing. Anybody remember? Danielson? You know Daniel wrote it down. Yeah. B-Dub? Yeah, B-Dub remembers. Highlander does, yeah. Yeah, Highlander's been around a while, though, huh? Excuse me. Gee whiz. Highlander, how long have we known each other now? How many years has it been? $2013? All right. That's cool, huh? Yeah. That's cool. That's really cool. So anyway, so look at this. Right now, what we're talking about is you making decisions. You know, this held, this held, this held, this held, this held, this held. Uh-oh. All right, this held, this held. Uh-oh. There's definite threats here. The threat you want to truly look for is not being able to breach this. Okay? And that could, I mean, that's a real threat. Does anyone have my book? Because I have an example of that right. If I remember correctly, it's a very similar chart to this. And what it talks about is how to anticipate a reversal. Maybe we should review that just, right? What you have is you have a strong trend going. Then you have a very significant pullback. Okay? And therefore, you mark the top. And by significant, I mean more than 786 or even 786 itself. In this case, it's 100%. So a hundo is very important. It's the distance between here and here. Okay? The reason for that, let me do this in a different color. If you were trend trading here, kicking off the 21, then it should have done something like this by now, right? But the 100% retracement is the red flag. Coolio, right? So, do you take it? Well, that's a personal decision. It's like, what is a good cigar? Oh, the one that tastes good to you. What's a good wine? Oh, the one that tastes good to you. Okay? All right? Cool. So anyways, you can try those, but be aware of the vulnerability that this sets up, because what it sets up is the classic head and shoulders. What? Okay. It also sets up the potential of this. Okay. So if you remember in the book, what it's suggesting is you can do two things. You can anticipate this, right? Or you can anticipate this. And sometimes that's handled by just selling and putting your stop up here, and you get both for the same price, right? Or letting it break, catching the pullback, and trading here. Okay? And that gives you two places here. Sort of, this is a sell if you're a bear, and try to have enough of a stop, which means you'd have to have a small enough lot size to be able to afford something higher for your stop, so you get A and B. Okay? And the next trade is actually C. So if I do my annotations a little nicer, A, B, and C. And of course, if everything works out tickety-boo, you're preferring A and C. And it gets more difficult if you're hanging on to B. But either way, C is a shot. So you don't know about A. B is almost mandatory, and C is mandatory. Okay? And what does all this come from? Your moving averages. Okay, this is the gauge of the market right now, and you have two signs of market contraction. That sets up the potential in here and in here acting as resistance. You see that? You see the step-by-step logic? So a bull is down in here, which we identified yesterday, and if I were me, I would be jamming a stop on that now, and it's either going to head above B and continue going and the trend is resuming, or we have some vulnerability in the trend. Now, what would cause the market to come down if the fundamentals are strong? Money coming out of the market. Vacation. Holidays. That's it. No, not supply issues, not demand issues. Those are essentially fixed. Supply is fixed. Okay? We know the United States and OPEC, how much they're going to produce, as much as they can. Okay? Okay? So that's fixed. Demand is fixed. We know it's growing reasonably fast, 3% or something. So it's just people leaving the market. It's not profit taking. It's not supply. It's not demand. It's just human nature. All right. T-Bone says, Thomas Van Ard says, hey, I came across a note this morning I made at the end of last year. The end of last year? The end of last year. Can't back out anymore. I have to go to a weekly. Is that last year? Probably right around the election, correct? Is that about right, T-Bone? Thomas? Tomas? Is that about right? Somewhere in this zone? Let me fatten this line up. So Thomas says, hey, I came across a note this morning that I made at the end of last year where you said the pound yen is going to go up to 150. And I was laughing looking at the chart back then, right? Yeah, amazing. You're welcome. Now, I think there's something interesting in here, more than being right, because to me it's just, I don't know, it was supposed to do that. Okay? Yeah. So that's what it's supposed to do, and okay, fine. But here's what I think is most interesting. These are weekly candles, right? That's a lot of time. But how many people here looking at smaller time frames, like let's say the hour, the 15-minute, that kind of stuff? How many people here by and large miss that whole thing? Like, you'd have to admit you're lost inside the forest. It's dark. There's no light. There's no sun. There's no stars to guide your way. And you just found yourself walking in circles of profit and loss and profit and loss and profit and loss. Anybody's right? Anybody willing to admit that they would like to try to improve? No. I wasn't saying you were laughing at me. No. But yeah, it's hard to think 1,500 pips ahead, or in this case, 2,000 pips ahead, right? Crypto miner says almost everybody. Yeah, but you know what's interesting is not everybody instantly responds. Well, yeah, I guess that last part, Gary, was too much of a freebie. Like, who doesn't want to improve? But specifically, miss the entire forest because you're inside the shadows. Okay? Yeah, Jimbo. I hear you, man. Yeah, it's good to have the crew, right? Good to be with the crew again. Okay. Gary says, I feel I'm only getting it now, right? Like, yeah, you're only now getting it. But we go through this metamorphosis. And so I challenge you to look at this and not say like what you were doing was wrong and now this is something better. But it's more like, if there was logic to this, right? Let's use a black circle here. If there's logic to this, okay, remember we talked about it actually down here, and I did a special webinar, I think it was right in here actually, because we expected that. But see, that's just strategy. Okay? But how many people can confirm this part? At the end of March, beginning of April, we started planning the bottom. Okay? The big that's it discussion that we had. My 5-year declaration occurred over there, right? Can anybody confirm that part? That's a very specific question. How many people remember the moment where I said, that's it? That's the thing. And it had to do with the reset. I was very clear. I'm like, I'm not sure if we have had a reset. And I'm trying to figure it out. Okay? Right? So from somewhere in here, I get the aha! That's it. It did reset. And I lay out a plan. In this case, I made a declaration of 5 years forward looking. Okay? Not the UK economy, not Brexit, not COVID, not the Japanese economy, not debt to GDP ratios, not COVID, not high energy prices, just a simple declaration based on what I learned from the Fed. Did the US economy reset, yes or no? Is there a new business cycle, yes or no? So then rolling in here is the political election. And then in here is what Thomas was talking about, or Tomas was talking about, of a 2,000 pip move. Okay, based on fundamental strategy and a political cycle. And now we're up here. Cool. Are we waiting for the weekly 21? Yeah, probably. Okay. Well, so what I'm trying to get to, Gary, is that I guess like in this period here, in the live group, right, the swing trading group where we meet every week, there have been several meetings in here because every one of these is a meeting. We talk, many of these meetings we talked about fundamentals, bias, and conviction. Correct? Do you have the strength and discipline to maintain your conviction? Now think about the logic of a coach now. I'm coaching you through these periods of time. Do you see sort of why now? Because it seems to me inside of this area, there have been times where conviction was questionable. Bias was loose. No anchoring on true economic data. So I pull it back. What do you know? Why do you think it? How much do you believe? It's important in this case, isn't it? So anyways, let's tie this together to now. Okay? It hasn't reversed. It has slowed down. And the thing is, the anticipated move over the next 6 candles, let's say. So let me do this slightly different. The next 6 candles are neutral. 1, 2, 3, 4, 5, 6. Okay? And by 8 candles, let's say, and 9 candles, I'm thinking here. Could it come all the way back here? Sorry, that was supposed to be a straight line. Oh my God. Wow, it does it every time. It must be a warp in my desk. Can it come back down here and retest this before heading up? Yeah, it totally could. But what are the probabilities? Okay. Well, it'd be a seasonal adjustment. So that would be from 155 to 145. 1,000 pip drop. So you're going to have to make that decision. Right now, 151 is a very, 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 very serious level of support. Serious. It's very serious. Okay? So you're going to have to say, well, is it going to do this? Or is it going to do that? I don't know. You don't know. So you got to plan it, right? Okay. Zero lag says we've already breached. What it's trying to represent is, well, I guess where to aim if you're shooting at a moving rabbit, or if you're shooting at a running deer. If you shoot at the deer, you're going to miss. So you have to shoot in front of it. Okay? And what it's trying to say is, there's the deer, but it's running, aim here, and they're going to converge. Another way of saying it is, we've already breached the 21, and we're waiting for the lagging 55 to catch up, and they'll probably meet down here closer to 150, right? So how do you get a look at that? Well, let's do another one. Insert zero lag. So currently that's in here, buck 47, but remember it is rising. So it's 147.60, but right? So what it's trying to suggest, if this is heading down, remember this is still guesswork. I'm manipulating the data to look forward, but remember that's a little dangerous because now you're going to try to fit your strategy into it. But what it is suggesting that well, let's do this in blue. Okay, this is going to continue up, let's say. Okay, so let's say we continue that trajectory. Then this would head down and then up. And that would give us 150. Okay. So I'm thinking that's a pretty key level for us. What do you think? Any thoughts on this? Any questions about this? I'm trying to predict the future, but on a weekly chart. Oh my God. My son is walking the dog in the rain? Oh my God. All right. Is everybody happy? Was that good? Was that good analysis? Please click the like button while we take a quick break. I was thinking of pulling something else up, but I don't think I really have. I'm not. Oh, you can't see the prices? Oh, you need the prices. Is that better? Oh, no. There we go. All right. About 1/3 of you are enjoying the content. Okay. I'm sorry. Okay. All right, so let's take a look at where we are, where we've been, where we're going. Okay, we're tickling the 83, which you can see was the discussion of yesterday. The target is 82. Great. Marina says great. Cool. Yeah, yen is nice and strong. Yeah. Okay. So we got to wait. If you're a bear, selling on top of our support is probably not that great, but ultimately, there should be another 100 pips to the downside, right? So it comes down to your decision-making process of when you want to sell. Walking into New York at support, I don't know. There's probably a better way of doing this. But that, again, once again, that's your call. Okay? So taking a look at how I teach you to trade, one of the key concepts here, and I just kind of went over one, right, is the anticipation of the reversal. Here's the lower high we talked about on, I think it was pound yen, okay? Breach, pullback, okay? So this was plan A. Remember, we had B up here, and then this was C. So plan A worked, plan C worked. Down, 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 down. Take the old support, drag it across, sell, okay? You can see in here we actually hit precisely the support zone and it stopped. So should you be selling up here? Gee whiz, man, that's up to you. That's up to you. Typically, I would try to look at this. Okay. Right now, it seems what has worked in the past is the 55. Okay, the 55 and the 55. And now you're in an exit zone. Now, it's not a valid exit zone because it's based on something already hit and breached. But we also have identified this as support. Okay. And it's near a psych. So what would you prefer to see if you were you? And, wouldn't that be preferable? But that's your call. I mean, seriously, that's your call. I guess the other way of handling it too would be the breach, the pullback, and that way. So now you're not selling at support, you're selling at resistance. Oh, same price. But don't you think that would improve your odds? What do you want to do when you wake up in the morning? Are you trying to sell at support or are you trying to sell at resistance? What do you think, Mr. Shanawaz? MD Shanawaz? Which one do you want to do, A or B? Do you want to sell at 83? And if so, A or B? Okay. Oliver brings up the point, is it okay to sell at support on a 1 minute? Well, I would propose to you that it's never proper to sell at support on any time frame. Okay? Look at what's worked. Okay? Down, 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 up, up, sell. 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 So is this enough up, up for you? Well, I would propose that we already had the pullback. This is a 15-minute chart. So hours ago, we tested 83 and have not made the lower low yet. It'd be like selling here. Okay? Be like selling here. That's what you want to do today? Well, Oliver, why don't you email me, wayne@fxbootcamp.com. It's not like I can give you the camera and you're going to take over the live stream and show everybody what you got. All right. All right, food for thought. Let's go back to commodities. Good. Okay. Right in here is the time of day, actually more specifically, right? Right in here is the time of day I've taught you on trading gold. Okay? And I said by 10 a.m., and it's almost 10 a.m., you should be out, right, with at least 2/3 of the ADR, average daily range. So if this moves, let's say, $30 a day, you should have at least $20 profit. But in less than 3 hours. Your whole trading day would be 3 hours or less. Oh, King, don't email me technical support stuff, bro. No. Okay. Okay. So what's the next trade? I would drag the support across and use it as a resistance line. What do you think about that? Smell like a plan? Anybody going to sell it at 1764? 1765? Yeah, oh, no worries, King. I'm just being honest with you. I'm not a tech support dude. Okay? Right on. Here's a classic trade, just looking at this. Breach below the psych level. That's supposed to be a straight line. Okay. And this is something we do in the swing trading group often, is you sell the retest. You blow through the psych level. You come up and you retest the psych level and you drop it like it's hot. Or if it's the other way, if you're coming up, if it's an uptrend and you hit resistance or whatever, let's say this is a psych level. Well, that wouldn't be. Let's say this was 2000. Okay. And we were heading up, up, up. You'd grab this. Chow. Okay. In this case, it's down, down, sell. Okay. You got that? Pretty classic. So now what you're trying to do is when you identify a range, you're identifying support and resistance. So again, the way I teach you is let it break and, in this case, sell the pullback. Or if it broke this way, buy the dip. Okay? Sell the rally, buy the dip. Okay, that classic FX boot camp. Okay? Mina says, isn't this against fundies since we're at war with Dixie? No, I'm not on a war, right? Right? Or bear, right? This is summer. So we're in neutrality. Remember, there's no trend anymore. What will you need for a trend? Traders. Every single day. And by next week, we will significantly lack the number of traders in the market. This is money coming out of the market. It's not people selling. Okay? So this is people leaving. So is this, okay, is this in line with fundamentals? Well, the fundamentals is points to a logic of the US dollar falling. That is true. But this is seasonality. Okay? Remember, last year, on or about June 16th, it had to do with the Fed meeting, but I'll just say June 16th, okay? Both last year and this year, I planned family vacations months and months and months in advance, right? Based on this date. How many people can confirm that? Months and months and months in advance, I planned the McDonald family holidays. Anybody confirm that? That you might have known this in May, you might have known this in April. You might have known this in March. Okay? Last year was pretty cool because I showed up at the beach after that period. Okay? So we're talking about the end of, right? The end of trading right there. So for me, this is people coming out, stable, people coming out, and then it'll stabilize. The next big day is Canada Day. How many people have heard me comment about Canada Day? Not once, not twice, not 4 times, many, many times, where you're like, why does he keep talking about Canada Day? Anybody? I'm trying to anchor this. So if you actually answer it, you're answering it to your subconscious. Okay? What does it represent, you say? The next wave out. The second wave out. Which means I come in now July 7th and I have an attitude now of stabilization. Okay? Canada Day, of course, Manus, is July 1st. Okay? So by the end of next week, okay? By the end of next week, the second wave of the second exodus will have occurred. Okay? And after that, it's about stabilization. So right now, what I'm looking at is dollar strength, yen strength. In 2 weeks from now, after the second exodus, I will be neutral. I don't know how to spell it. N-U-E, neutral. Neutral to bullish. Well, on dollar, let's say neutral to bearish on USD. Okay? So that would be me selling the dollar, but not expecting anything from it. Okay? Would I expect a lot of consolidation? Well, if I'm neutral, I don't expect a lot of anything. But I do want to start building. I can tell you in years past, not every year, but in years past, I have bought, for example, euro dollar, in July, right? And sold that position in December. Not every year, but many years. My behavior doesn't change. I don't decide, well, one year I'm going to hold it and the other year I don't, unless there's fundamental reasons, and that should be self-evident based on things like central banking policy. But let's just say in a normal world, and there is a normal world. It's not random. Okay? So, all else being equal, I'm going to trade the same way year after year after year after year after year. I'm going to buy in July and manage my risk. That's it. I'm going to buy in July and manage my risk. Do I get out in 2 weeks, 2 months, or at the end of the year, 5 months? I don't know. It's not up to me. Okay? You got that? But if I see money leaving the market, I get the hell out of the way. How many people have heard the tsunami stories? Where I don't care if you're an Olympic swimmer. Don't jump in. Uche says, but the right timing though. Yeah, that's technical analysis. That's awfully easy. I don't know how to say it. It's like, dude, that's the easiest part of it. Let me ask you something. Is this bullish or bearish? It's bearish. Good. Don't buy it. Like, what's the problem? Technical analysis can't possibly be the problem. Is that down or up? Down. Then you can't buy it. What's the problem? What do you mean timing? When it's bullish, buy a dip. When it's bearish, sell a rally. There's no timing issue. Okay? So now it's more like, it's more observable. So what I would more expect is, okay, a second exodus, then something like this, and then something like this. Okay? So, right, I'll buy here, and maybe it'll do this. If so, I'm in. If it goes down here, oops, let's do it different. If I buy it there, but instead it drops down here, then I'm out. And then I'll buy this. Or I'll buy that. I don't think I'll buy that, but I will buy that. Okay? That kind of stuff. So I have an expectation of a trough, generally speaking. Bearish, neutrality, and then resumption of trend. Why? Fundamentals. This is seasonality. Well, let's do it this way. This is seasonality, okay? And this is fundamentals. Okay? But technical analysis, oh my God, that's easy. Okay? So for example, if you were a bull and you bought here using technical analysis, you got knocked out. So what? Stop buying. Okay, you took a shot in the dark. It was a long shot, right? A Hail Mary. But at least technical analysis allowed you to do it without risking a lot. Now, also, if you have your bias screwed on correctly, this was an easy sell. All you had to do was be bearish. See, that's the issue. Technical analysis is confusing if you don't know if you're a bull or a bear. If you know you're a bear, selling a retracement back to a psych level doesn't get any easier than that. Okay? So technical analysis is easy if you know if you're a buyer in a market or a seller in a market, and many amateur traders don't know that information. And that, my friend, is the challenge. Okay? Manis says, I find myself wanting to buy counter trends, essentially, right? Well, then stop. Okay? Stop. Stop doing it. So if you were a bull, like you like the idea of owning gold, okay, using technical analysis, for example, you will need to see something like this. Okay? M must be not equal. M needs to be greater than 0. 0 must be less than M. So wait. I can't wait, dude. I got to get rich now. Well, you're not going to get rich fighting the current. You're not going to become a better swimmer by jumping in a tsunami. You're going to get hit by a car, by boards. You're going to get slammed into a wall. You're going to get pierced by a pole. Okay? Or the current's just going to pull you under. You're not that strong. Okay? So Y equals mx plus b. And you need M, okay? M must be greater than 0. Okay? So, okay, you need B in the upper quadrant. Okay? You need price to intercept into this quadrant. Okay? Certainly not buyers down here. Okay? You guys see? Let's pick one. Okay, so you do all this, and you want to see a positive. So, right, here's the axes, here's the intercept. So what you're looking at is the rise, okay, M, as we're saying here, M is, right, rise over run. I guess you do it this way, right? So this distance here, right, let's say 3, and this distance here, let's say over 2, okay? That is greater than 0. So therefore, you can be a bull. This is not a great example. See? See? This is bearish. Okay? This is discussing the intercept. But anyways, that's not a very good document. QMath looks like QMath. Same, exact same article. Okay. Anyways, elementary school math, right? So I look at that and it says bearish. Oh, well, I don't buy it. You see? If you see this, it's bearish. So why would you buy it? It doesn't make any sense, right, Manus? But you got to make a mental and emotional declaration to yourself. You cannot buy that. Why would you buy it? Okay. What you want to do is identify the end of the trend. Okay. And that would be something like that. You know what? That'll probably happen in July. Okay. So your choices are sell or not sell at that point. This is a sell. Okay? And this will be a sell. I don't see any other options on this time frame. They just don't exist right now. That's why I'm saying, like, technical analysis, that's easy. Okay? Knowing that in 4 weeks, the potential for this to be more bullish than bearish is significantly higher than right now. Okay? Well, impatience leads to poverty, Manus. Okay? Okay, rich people have all the time in the world. Okay? Okay, let's take a look at maybe some other risk on type scenarios. So I'm long at 30,000. Actually, a little bit less than 30,000. You're welcome. All right, cool. So is this bullish or bearish? Well, looking at this time frame, y equals, m is greater than 0. How do I know that? Well, let's use a tool that makes that easier. Indicator, custom, price action pivot points by FX Bootcamp LLC. Okay, on this time frame, there's still bearishness. And now you're going to say, Wayne, but which time frame is right? Well, of course, they're all right. It's your decision is what you need to decide. Okay, so how many bars do you want? Well, if you want long term, I think I said yesterday you could do something like 366 and call this long-term trend. Okay? So let's back out. What do you think about that? So apparently, I bought Bitcoin one standard deviation from the long-term mean. Oh my God. Oh my God. Oh my God. Oh my God. Becky, look at that Bitcoin. Look at that. One standard deviation from the basically annual mean, right? Why not 365? Why 366? It's Fibonacci number. Why not? Right? 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366. All right. Dang, boy. All right, that's cool, right? Oops, where'd she go? Okay. So that's over the last 366 hours. But let's say you're much more interested in the now. Okay. I want in now. So that's basically over the last day, right? 21 hours. Oh my God. All right. So do you want to buy there? No. Where do you want to buy? Something closer to that. Okay, see? It's simply technical analysis. Easy peasy lemon squeezy. Okay, cool. Look. That's tomorrow's trade plan. You might get a front run. You might have to wait till Asia open. What do you care? What do you stink? Smell like a plan? You're going to cut a corner? Go in on the fiver? See, if you cut corners like that, right? Still, you probably want to, it's about the same. But if you're trading the 5 min on this, then you're probably looking at that. Okay, so you're basically going to buy a dip to 36. That's your call. That's the difference between a day trade or a scalp, essentially. That's your call. Okay, both are correct. I just don't know which one's going to make you money. Okay, that's for you to decide. Ether, anyone buying Ether? Okay. Nice. Why is this an entry? Can you see logic for it? Manus, they were added 2 weeks ago. I just haven't really told anybody. Pete, I can't do it, but you know that. Yeah, I'd probably take Cardano over Ethereum. Is 2.0 out yet, Peter? No, is it? It's a question. Is it? I'm not sure. But the Cardano, I think, will be interesting once you can do smart contracts on Cardano. Oh, delayed, huh? All right. This template actually bothers me. I gotta fix this. It's just driving me nuts now. I don't remember what this is. No, that's color. I don't want that. What's it doing? I guess we'll leave that there and do that one 22. Why is it not moving? Just won't move. Strange. Yeah, there's a glitch there. $600, $550. Oh, it's that one is probably what I'm supposed to be moving. All right. Cancel. There we go. All right, that'll do, pig. That'll do. So what do we got here? Weekly. Oh, what did I do? Can't believe it. I just screwed it up. Oh! What a dum-dum. What a ninkao poop. All right, let's find somebody on here that works. Yeah, okay. Weekly. It's not screwed up. Cool, that should work. So now I switch this over to weekly. Template. Pivot points weekly. Boom! Better, huh? Which frameworks? Flare Network, FLR coin for smart contracts. Yeah, I don't know anything about that one. Manus Trader's Way has a Mac version of MT4. I don't know anything about it. But... Cool. Anyways, yeah, I think we did enough today. I think it's all good. So thank you for being here. Thank you for subscribing. Thank you for clicking the like button. Please leave a comment on the recording. The recording will be available in about 1 minute. Please document a key takeaway that you learned during today's 90-minute session. So again, thank you to you for being a positive contributor to the community. I will see you tomorrow. Peace on earth. May the pips be with you. May our profits be above average. Remember, just refresh this page in about 30 seconds and you'll be able to leave a comment on the recording. Thank you for doing that. Peace on earth. May the pips be with you. May our profits be above average.